So when we are self-employed, we not only have to concern ourselves with income tax, we have to concern ourselves with self-employment tax. Self-employment tax is Social Security and Medicare tax. And remember, for employees, the employer and the employee share that expense, right? The employee pays half, the employer pays half. When you're self-employed though, you are both employee and employer. So, as a self-employed individual, you have to pay both halves. So if you recall, there it is. So for self-employment, SECA, remember that? Self-Employed Contributions Act. We have Social Security, or OASDI, and we have Medicare. The percentage was 12.4% and 2.9%. And then we also had additional Medicare tax. Remember that? Additional Medicare tax? 0.9%. All right, these are all the self-employed taxes. Now remember, for Social Security tax, we only tax income up to a certain amount. Now, when you guys learned it, unless you were in payroll tax last semester, it was a different amount. I think it was like 142.8 or something like that. It's 147 in 2022. It was 147. Okay, and that's the magic number now that you want to use is 147. So our base for this is 147. So all income up to 147 is going to be taxed at 12.4%. Now again, this is our net income. So when you're self-employed, we're not talking about our gross, we're talking about after all of our expenses, right? After all those, after our depreciation, after all of the expenses that our travel expenses, all of those expenses that we've talked about, after we subtract our home office expenses, after all of that, that's the number that we're using here. That's the number that then is going to be subject to Social Security tax. Medicare tax, there's no limit. All of it will be subject to Medicare tax, the regular Medicare tax of 2.9%. Right? That additional Medicare tax, now when we learned it in payroll accounting, let me see it here, 2.9. That additional Medicare tax is actually applied in a different spot on the tax return. I want to see if they even talk about additional Medicare tax here. I don't think they do. Yeah, it was, so that additional Medicare tax though is applied in a different spot on the tax return.
I think
You want to be
it's like
downstairs.
example 635. Oh, sorry, right above example 634, not 5. So I think you could, like right there, up a little bit more, up one more, right there, at the top. Is that where it is? The 250 for joint returns.
Oh, is it? Oh, yeah, I'm looking for a table. I don't like it when they do that. All right, so the additional Medicare tax is, so yes, when you're working in payroll, so for payroll professionals, the magic number is $200,000. Right, so if you make over $200,000, then the amount over $200,000 would be subject to the additional Medicare tax. However, the actual tax is not necessarily on $200,000. That's just when the payroll starts to deduct and withhold on that. It depends on filing status. So for married filing joint returns, 0.9% is imposed on self-employment income of $250,000 or more, if your filing status is married filing jointly. If your filing status is married filing separately, it's $125,000. $200,000 for everybody else. So you can see that it's entirely possible that that 0.9% is gonna have to be adjusted on the actual tax return. Because of course, these are self-employed individuals, but if you're an employee and you've had 200,000, you know, your income is over $200,000, your employer has withheld that 0.9% on the amounts over 200,000. But then when you go to file your tax return, if your filing status is married filing separately, well, your limit should have been 125,000. So they over withheld, you're gonna get a refund back. If, however, your total income with your spouse exceeds 250,000, but only up to, what is it? Only amounts up to, or over and above 200,000 have had withholding, then you're gonna owe more Medicare tax. So this gets reconciled on the tax return because the amounts that are withheld don't necessarily match what is actually assessed, okay? But this is the additional Medicare tax. Again, it's gonna be I don't know why these can't last more than a week. So married filing jointly over 250,000. That's gonna be applied. Married filing separately over 125, and all others over 200,000. So head of household, qualifying widow or widower, single would be all others. All right, so we've got we've got our bases here. The calculation, there's another wrinkle in this that you don't learn in payroll tax because we don't really study self-employed individuals in payroll, right? We're concerned with employees, not the self-employed. We talk a little bit about what these tax rates are and everything, but we don't go into the detail of the calculation for self-employment tax. So the total self-employment rate is multiplied by 92.35% of self-employed income. So it's a reduction in the amount of income that's actually subject to self-employment tax. So if you have $100,000 of income, here's your self-employed net income. When you're calculating the self-employment tax, you're gonna multiply this by 0.9235. So 92,000, is that right, 350 is gonna be subject to self-employment tax. So you do get to shelter 7.65%. 7.65%.
And you include that number in the Social Security and Medicare.
This is, so income tax is gonna be calculated based on this 100,000. Income tax.
Yeah.
Self-employment tax is gonna be calculated based on this.
Oh, yeah, because the problem starts in the homework, because I don't learn this one before.
Okay. We can go through one of those problems. So here, let's see, do you have an example here? So the first thing when you're calculating for Social Security and Medicare tax, not for income tax, for Social Security and Medicare tax, that SECA tax, you're gonna take the net income, whatever your self-employed net income is, and this is after all of your gross income, after all of those expenses, that bottom line, also after the home office deduction, you take that number, multiply it by 0.9235, and then multiply that by the tax rate. Same thing for Medicare tax, okay? The additional Medicare tax and income tax are different.
Would it be possible to go over the homework one? Because I had put in, followed that
Yeah.
formula, and it was telling me that what I got was wrong, so I'm not sure
Yep.
what I was putting in wrong.
Absolutely. Okay, we'll go through that. So this Schedule SE is where you calculate the self-employment tax. And again, if you ever get tripped up on how do I calculate this, refer to the form because it will tell you, it will take you through the steps. So that example there that we had up here, the 15,000, this is how they calculated it. So net profit or loss from Schedule C, line 31, that's our bottom line number on that Schedule C. It goes here on line 2. It references some other forms too, so the 1065, don't worry about that right now. Line 3, that's our total. Here's where it tells you. Multiply line 3 by 92.35%. Okay, so that's 13,853. If line 3 is more than 0, oh, I'm sorry. Let's see. B. If you like one or both, okay, so we don't need line 4. Oh, this has to do with Conservation Reserve Program. Don't worry about that. Combine lines 4A and 4B. Okay, 13,853. If it's less than 400, stop. So if the total amount of self-employment income is under $400, you don't have to pay self-employment tax on it. Okay, give you a little break. Now, you don't get to reduce your income by $400 in calculating it. Unfortunately, if you make $400, you're gonna be taxed on the whole $400, but if you make $399, you're not gonna be taxed on any of it. So, but if it's less than 400, you don't have to do that. Church income, we don't need that. Multiply, we'll get down to 5B. Multiply line 5A. Oh, no, that's church income. Never mind. Line 6. Add lines 4C and 5B. Well, 5B is 0. So 13,853. Here's where that Social Security wage base comes in. 147. Maximum amount of combined wages and self-employment earnings subject to Social Security tax, or the 6.2%, yada, yada, yada. 147. This is going to be automatically printed on the form. I think in 2023 it's like 60,000, 160, something like that. And it's, I mean, it goes up every, you know, for inflation, obviously. Okay, 147. What is this? Total Social Security wages and tips. Oh, this person must have had wages as well. So, because remember, this 147 applies to all of our earned income. So we're going to include our wages here, the wages that have been earned, because that helps to absorb some of that 147, right? Combined wages and self-employment income, any amounts with those two combined over 147 are not going to be subject to Social Security tax. So that's why we're putting this, that's why they've got this here. Social Security wages and tips. So this is total of boxes 3 and 7 on forms W-2. So that's where that 79,200 is coming from. All those are added up. Line 9. So subtract line 8D from line 7. So this is the amount. If this was 0 or less than 0, then that means we've exceeded that wage base. And we've got amounts that aren't subject to self-employment tax, or to Social Security tax, I should say. But in this case, we still have 67,800 to go before, after our wages, we still had $67,800 of income to go before we get to that 147. Well, we had 13,853 of self-employment income, so we're nowhere near that wage base in this example. So multiply the smaller of line 6 or line 9 by 12.4%. So whichever is smaller of those. 67,800. Line 10, multiply the smaller of, oh, I already did 10. Yes. And then 2.9%, we've got our Medicare tax there. And then we're gonna add those two together. That's our tax. That's our Social Security and Medicare tax that we have to pay. That is gonna get added onto Schedule 3? I can't remember, Schedule 2, the other taxes schedule, and then it's gonna flow through to page 2 of the 1040 as well. So after we've calculated our income taxes, then this gets added on top of that. Now remember, we get a deduction, an adjustment for half of that amount. Remember the 1/2 of self-employment tax deduction from chapter 4? That's what this is calculating. So multiply line 12 by 50%, enter it here and on schedule 1, form 1040, line 15. That's where we're getting that from, that 1/2 of self-employment tax. It's coming from this form here, this calculation. Don't worry about part 2 here. The key things to remember with the self-employment tax, again, your base, right? Don't forget that base, because that can trip you up. And the fact that we get to reduce our net income by 7.65%.
And
Okay.
we can add this one too.
And the additional Medicare tax. I don't know, do you have problems that include the additional Medicare tax? Okay. But keeping that in mind.
Yeah.
But you notice, it doesn't say anything on here about the additional Medicare tax. That is calculated elsewhere. Because that's going to be based on all income on the tax return, not just self-employment income.
Yeah, so if I'm take example like that, if somebody have maybe only 195,000 like that, so you want to be started for this one, yeah.
So if their income is 195,000, depending upon their filing status,
Now, if somebody don't say anything about it,
if they don't say anything about it,
yeah,
well, I mean, they should say something.
because it's then homework here. Yeah.
Oh, if it doesn't say, then don't worry about it. Because if it's saying, so like this one, compute self-employment tax liability. Self-employment earnings of 195,000. Well, okay, they should tell you, like, assuming Landon is single, because the only filing status that would have a limit under 200,000 is married filing separately. He's not married filing. They would tell you if he's married filing separately.
So if not,
Then there's no additional Medicare tax.
oh, okay.
Yeah,
Thanks.
yeah. Then you don't have to worry about the additional Medicare tax.
Could you go over that for the 195? Cause I tried to follow you, I'm so a little lost.
Okay. Let me, can I finish the QBI up real quick? Because I wanna get through. I know you guys have a QBI problem too, so.
Not a problem.
The QBI is a lot simpler than it seems, okay, than how they explain it here. There are a lot of nuances to it, which QBI stands for Qualified Business Income deduction. So I'm not gonna go into the history of this particular deduction, but there is a history with this particular deduction. Certain professions get a 20% deduction from their net income. It does not offset, this does not show up on the Schedule C, it shows up on the Form 1040. It is calculated using income from the Schedule C, but it does not offset Social Security and Medicare tax. It only offsets income tax. It goes right below either the standard deduction or the itemized deductions, whichever one you're using. Okay, so it goes right on the first page of the Form 1040. It's calculated essentially by multiplying whatever is on line 31 of the Schedule C by 20%. However, there is an adjustment to it, and I think this is where a lot of students get mixed up. So the deductible part of self-employment tax and deductible health insurance. So you gotta add those amounts back. They don't give you, because otherwise they're doubling up. They're giving you a deduction on top of a deduction. They don't like to do that. They don't like to do that. So take whatever's on line 21, add back half of the self-employment tax, so whatever we've calculated for on that Schedule SE, and if there's any self-employed health insurance.
Are those two amounts gonna be on one of the forms then, like, that you could go and like find, or do you write it on the form, or you just like know in your head that this is 50% of the self-employment tax plus 20% of the health
So
insurance?
the self-employment tax and I think it's only, for your problem, I think it's only the self-employed, I don't think there's a health insurance component to
Okay.
that problem. That self-employment tax is gonna, you're gonna find it. Over here. Ah. Stop. Oh, maybe I went past it. On, no. Sorry. Oh, shoot. Oh, here. Right there. And actually, I think I said that you subtracted, but I think you actually added back. So let's take a look at, so that's kind of the rough and dirty QBI. That 20%. Let's look at some of the problems, okay? Because I know, and you know, your problems don't get into the weeds on this, 20% of the QBI or greater of 50% of the W-2 wages with respect to the yada, yada, yada. Some of these are, so one of the things about the QBI is it's only, there are certain professions that are exempted from it if they earn more than a certain amount of money. Professionals, accountants, architects, doctors, lawyers. If they earn, and again, this only applies to self-employment income, so if they're employees, it doesn't apply to them. The deduction for those individuals, the QBI is reduced when their taxable income for the entire return exceeds $340,100 for married filing jointly, and then different amounts for the different filing statuses. Okay, so I don't think you guys have to know that for your problems, but let's take a look at, hold on just a